a start to September today was. Didn't take any trades yesterday, reason being it was a public bank holiday in New York, so the stock market was closed. That's why you can see the market very much closed straight after around 1 p.m. Eastern. Didn't take any trades. Mondays generally are like that, and the fact that it's a public bank holiday, you can see not much was happening. However, today market opened right here, okay? And when the market opened, immediately got below and started to sell off. Asia session opened, it chopped. Ideally, using standard deviation, I like to take my trades around 0.25 because in between, it's normally trying to decide where the trend is going for the day. Now, if you look here, we have 0.25 right here, and then we have a fair value gap. Fair value gap on 15 as well. So when this broke, I took a small position on the break as soon as London opened. Once we bounced off that fair value gap and this candle started to wick, I added the rest of my positions and I got out, I think, right here. So that would have been roughly around a 15-point move. At this point, I was done for the day. Today is the first full trading month of September. Normally the first day of the month can be quite volatile, but I did not expect this. I walked away, had some stuff to do, then I came back and I saw this. Now this is an A+ setup right here. Market comes below, -1, comes back on the retest, added some contracts here. 3 candles, and I'm out at 1.25. Those are the 2 trades I took, again using just standard deviation. Now, on the higher time frame, if we have a look right here, this was the start of today, and you can see the higher time frame is bearish. Okay, got this candle coming down here. This is the 4-hour. It's very bearish. You can see that the market structure on the 4-hour shifted once we got below here, and the same on the 1-hour. If you just want to highlight this candle in the body, you can see, if you want to include the wicks, you can see the market came up, rejected the box, and then being Monday we chopped, but there was no intention, there's hardly any movement going up. This was pure accumulation on public bank holiday. So at this point, I'm just looking for shorts. Market is very, very bearish. We're below the 5-day MA as well, and you can see we rejected even the 20. And those were the 2 trades I took. This during London, and then this before New York. This here, this push up, is literally just so sellers can sell at a higher price. Cannot take long. When the market is this bearish coming into New York, you need to have confirmation on multiple time frames. Now, you could argue that here there was a market structure shift. Okay, market went up, but on the 1-hour during New York Open, if we have a look here, this is New York Open. Where is New York Open? Right here, you have to have the market come above here at New York Open above 0.5 and then take the trade long. 15-minute time frame is just not enough when the higher time frames like this is telling you the market is very, very bearish. A lot of traders would have got caught on this position thinking the market's going to recover all this way, thinking that a 1.25 move is a lot and it's done. It is a lot. It doesn't often get past 1.25 or not even get to 1.5. And it did. But you cannot be the first person to the party and also the first person to leave. If the higher time frame is telling you at this point, right, we'll consider it up to here. So these candles would have been here before New York opened. It's telling you that the market is bearish. You cannot then go and take calls and get stuck in a trade. Okay, the market structure may have shifted here if you wanted to use this slightly. I'd prefer to use this one up here as your market structure shift. Reason being because it matches up with the 1 hour. So this move here, you cannot take. Second thing I wanted to talk to you about is multiple entries. There was so many entries here that you could have took. The break of 0.25, the pullback to the fair value gap. You could have taken the pullback into the fair value gap below 0.5 if you wanted, all the way down to 0.75. If you took the break of 0.75, you see this pulls back one tick below, there's another entry. You could have taken this rejection of 1 like I did down to here. New York opens, we get below 0.25, not the cleanest of entries, but there you go. Normally in New York, if the trend is down or the trend is up, there's not going to be a reversal until the AM session finishes. AM session finishes at 12 o'clock Eastern. So that is something to bear in mind. You'll see here, as soon as the AM session finished, we had this massive reversal. Okay, if you go back, you'll see here, 9 times out of 10, nothing is 100%. Okay, you'll see here New York AM sell off, gets to PM, and then reverses. New York bullish, and then continues bullish in the PM session. AM bullish, continues bullish, and then we get a bit of this must have been a news candle here. Again, New York AM bullish, continues to be bullish for the whole session. New York AM bullish, continues to be bullish for the whole session. New York session bullish, continues to be bullish for the whole session, and then chops. You'll see here, same thing, had a reversal, had a fake out here. Market was bearish coming up to it, bearish, and then a reversal on the PM. Again, 9 times out of 10 this does this, so don't kill me if you find one that goes the opposite way. Bearish all the way. This one did actually reject and turn halfway through. Fair enough. But most of the times you'll see here that the trend will continue for the whole session. Chop, New York AM, bearish, reverses at PM. Bearish, reverses at PM. And that is how you can align your trades even if you miss New York Open. If you miss New York Open, there will be an opportunity to enter maybe at 10 o'clock, 10:30. And yeah, so something to bear in mind. Remember how to trade these standard deviations. Do not be the first to the party and the first to leave. You should not be calling a bottom when there is such aggressive selling going on.